Good afternoon, Mr. Chairman.
Good afternoon. How are you, sir?
Can't hear you.
Can you hear me? Okay.
Not yet.
Can you hear me now?
Still can't hear you yet.
Okay. Can you hear me now?
I hear you, Representative Yurda. This is Kevin Hagler at the Banking Department.
How are you, Kevin?
Doing well, sir. How about yourself?
Doing well, doing well.
I appreciate you doing the sound check because every time I use a different one of these systems, I never am sure if anything's working on my end.
Same as well, and I'm not sure. Uh, Spencer, can you hear me? We're kind of digging out of the snow in South Georgia.
It's unbelievable to see snow where you don't normally see it at all and to see it that thick.
Yeah, we got about 8 inches. It's still around too.
It's unbelievable. I'm north of Atlanta. We just had a little dusting.
Yeah, that's what I understand. It's kind of the opposite of what you would think. The farther north you
Absolutely.
go, the less, right?
Right, right. That's just not right.
That's right.
I saw a picture from Savannah with snow, and I didn't think that was actually possible.
I know. I know. It's incredible. It's definitely a once in a lifetime event, I would say.
Yeah.
Good afternoon.
Hello? Can you hear me, sir? Come in. Yeah. Go with first.
So I don't, that didn't do it. Maybe you got your microphone on down here. It should be on. There it is.
But some of them can't hear me. Kevin could hear me.
You got it turned up over here.
I can hear you, sir.
Oh, okay,
There.
okay,
Yeah.
very good. Very good.
All right, good afternoon, everyone. I'm Marcus Wiedauer, convening our first meeting of the General Government Subcommittee Appropriations. Appreciate everybody being here. For some new members that have been on appropriations previously, I've always talked about this committee as what I refer to as the super not sexy portion of the budget. But when it comes to constituent services, is a wonderful, wonderful committee to be on. I think probably 95% of the things people reach out to us about are probably dealing with one of the agencies we'll hear from. And it's, we got good people running these divisions, and appreciate y'all being here, and we'll hear from some of y'all shortly. But we're going to start with introducing everybody on the committee. Again, I'm Marcus Wiedauer, live in Watkinsville, Georgia. Been serving since, I guess 19. So this is my fourth term. And again, I really appreciate the work this committee does, and the folks that come through it. We'll start. Let's go online and get that out of the way since we're surviving another snowpocalypse. Let's see. I think I see Chairman Parson online. If we want to, Chairman, if you don't mind unmuting and introduce yourself, please.
All right, thank you. Thank you, Chairman. Can you hear me?
Yes, sir.
Don Parsons, and District 44. I represent part of Cobb County and Cherokee County, and always glad to be part of this. Part.
Awesome. Thank you, Chairman. I see Bill Yurt online. Bill has sent me quite the picture from Sylvester down there. You got quite a bit of snow this week. Bill, you want to go ahead? I think you're on mute.
We certainly did, Mr. Chairman. We're still digging out of it, actually, and appreciate you allowing us to be on a Zoom call with you. And I represent District 152, which is Worth, Lee, and a portion of Dougherty County. And it's a privilege to be on this committee where a lot of state help comes from to our citizens, and we appreciate you guys.
Well, I appreciate you being my vice chair for a while now. I appreciate you joining us, and glad you got to make a snow angel or two while we're at it. So we'll move on to Chairman Smith. Lynn Smith's online. She's muted right now. Hopefully she's not driving. All right, we'll move on into the room. We'll start down here at the end. Representative Davis, I know you're not on the committee, but you're a guest, and we're going to recognize you real quick.
Thank you, Chairman. I'm Representative Viola Davis, and I serve House District 87, primarily in Tucker, Pine Lake, and Stone Mountain. And I thank you for allowing me to join.
Yes, ma'am. Appreciate your interest. Obviously, the only thing we're legally obligated to do is pass a budget. So this is kind of an important deal. Also, a guest member today down on the end. What number are you, Gary? 28?
Yes, 28.
Pull that to you.
Yeah, it's Gary Richardson, District 125, part of Columbia and McDuffie counties, and just here watching the process today, and thank y'all for allowing me to join you.
Well, we appreciate you being here. Now, flanked by three new members to the committee, we'll start with Representative Reeves down on the end.
Thank you, Mr. Chairman. Matt Reeves. I represent Duluth, Suwannee, and Sugar Hill in Gwinnett County, District 99.
Awesome. Thank you. Old Tarvin.
Thank you, Mr. Chairman. Steve Tarvin, District 2, representing portions of Catoosa, Whitfield, and Walker. Been on appropriations. I think this is my 8th year, and I was on economic development, and found myself over here on this great committee. Thank you, sir.
Appreciate you. Representative Ridley.
Jason Ridley. I represent District 6, which is portions of Whitfield County, Gordon County, and all of Murray County. I've been in the legislature since 2016, and me and Tarvin both got kicked off and got moved over here because apparently you need more help.
Well, That's a good segue into the fact that you're the person in the room that needs the Lord the most. So if you'll go to prayer for us, that'd be great. Open us
Great.
up.
Let's
Thank
talk
you.
about it. Lord, thank you for this day and thank you for what you've given us and done for us. And please protect us from all the people that still under all this weather that they're going through. Let us make a great decision for the great state of Georgia. Thank you and amen.
Amen. All right. Let's rock and roll on this budget here. We're gonna start Department of Administrative Services. DOAS, DOAS, whatever you want to call them. And you can present from the table, the podium, wherever you guys would like to be. Introduce yourselves when you get a chance.
Thank you. Good afternoon. I'm Rebecca Sullivan. I'm the Commissioner of the Department of Administrative Services. I'm from Snellville and I started in 14. I'm with me here at the table is Wade Dameron. He's our Director of Risk Management Services at the Department of Administrative Services. Good afternoon to the members of the committee and our guest representatives. I don't think anybody's ever called administrative services sexy, but we know how important it is, and we very much appreciate this committee and your attention and your help as we carry out our responsibilities. So thank you for the opportunity to present today on the governor's budget recommendations for DOAS in the amended FY25. There are 3 recommendations for DOAS in the amended budget, all within the risk management division. Yes, sir.
Just want to direct page 3, section 12 for those of you guys following along. Sorry to interrupt you.
Yes. So 3 recommendations, all within the risk management division, which I will speak to today and for which we request your support. As mentioned by the chairman, the changes are in section 12.6. Starting with the property program, section 12.6.2, there is a recommendation to increase funds to meet the cost of excess insurance and projected future claims expenses for the property risk pool in the amount of $50 million. Beginning with a little bit of background, as most of you are aware, DOAS manages the state's property insurance program through a combination of self-insurance and excess carriers, commercial carriers. The state currently insures nearly 14,000 buildings and contents with a combined value of almost $50 billion. I've spoken to this committee for the past several years regarding this program. The cost of commercial property insurance has been steadily increasing, and it now exceeds $40 million annually for the state's portfolio. The state has also taken on higher retention levels in the last couple of years in order to retain coverage and stay within our allocated budget. So the retention has increased from $1 million to $10 million per occurrence. So the state is now bearing a much larger portion of the risk of property damage. So for many years, the billings for property insurance to the agencies remained flat and did not account for rising costs in the program. And this has impacted the health of the property trust fund. The projection for the trust fund balance is just $21 million by the end of this fiscal year without the governor's recommendation of a one-time appropriation of $50 million. The governor's recommendation here is part of a strategy to improve the overall health of the property trust fund without further impacting agencies through increasing property premium billings. And it will position us to better respond in the event of catastrophic events such as Helene. I have been asked to give the committee an update on the impact of Hurricane Helene to the state's properties, and it was significant. The storm's path impacted 98 counties across the state. Approximately 24% of the state's insured value was exposed to the hurricane. A total of 282 buildings owned by 33 different colleges, universities, and agencies were damaged. While we're still refining the estimates through the adjusting process, this total state property damage claim from the storm is estimated to exceed $50 million. Some of the largest claims are from Augusta University with an $8 million claim, South Georgia State with $11 million claim, Department of Corrections, $6 million, with DJJ, DNR, and DOT all having $4 million claims. So this obviously is a significant catastrophic event. Just to give you some historical reference and context, Hurricane Michael in 2018 resulted in $16 million of damage to state properties, while Winter Storm Elliott in 2022 resulted in $22 million in damages. So, as you all know, Mother Nature is quite unpredictable. Catastrophic events do occur, and the state has almost $50 billion in physical assets that could be exposed. That, of course, is why it's important to maintain a financially sound property trust fund balance. And the governor's recommendation of the $50 million one time will help to ensure that we have adequate funds to cover the repair and replacement of buildings and contents when events such as Helene occurs. The next recommendation that I'll speak to is the liability insurance program. That's section 12.6.3. The governor has recommended a one-time appropriation of $175 million to reduce outstanding obligations in the state's liability insurance program. We do very much support the governor's recommendation. Just as a little background, the liability program at DOAS provides insurance for state entities, officers, and employees for claims made against them in the course and scope of their employment through a combination of self-insurance and commercial policies. The program provides coverage for both bodily injury claims and third-party property damage. Given the size and scope of state operations, the state bears a significant amount of liability risk. The program insures 325 entities and over 130,000 employees who are carrying out the important work of state government, ranging from constructing roads and bridges, providing health and human services, and ensuring public safety. As such, DOAS provides liability insurance for every sector of the economy, ensuring a widespread and significant amount of organizational risk. DOAS is currently managing over 1,600 liability claims against state entities, its officers or employees. And I want to point out that the governor's, recommendation here stems from the significant outstanding liability to the state's current claims. Over the past 9 years, there has been a steady and significant increase in the outstanding liability for claims within this program. According to our actuarial reports, the outstanding liability has surged by 343% in that time frame, rising from $89 million in 2016 to $394 million at the end of FY24. This is for current claims, does not include any new claims that may and will arise. The cost of new claims is expected to increase, with the projected cash flow for current new claims rising by 14% in FY26 and additional 19% in FY27. Under the status quo, we anticipate the outstanding claim liability in this program will continue its upward trajectory. And, I think that the significant upward trend certainly highlights the increasing financial burden on the liability program, necessitating the need for some strategic intervention and additional financial investment to address and manage this escalating liability. The question that I expect is in all of your minds is, what's the explanation for this? I would like to note that the trend is not unique to the state of Georgia, but mirrors patterns across other states and the industry in general. And the cause in this dramatic increase cannot be attributed to one single factor, but I do want to talk about a few. The rise in the average cost per claim is a major driver. This increase can be attributed to a variety of factors, including general inflation. Additionally, a significant portion of the claims now involve complex and costly legal settlement costs, which are further compounded for the potential for very large verdicts. The nature of the services that the state provides is also a contributing factor. The risk of liability is, of course, inherently higher in areas such as health and human services and public safety. So these factors have significantly amplified the liability risk for the state, while also decreasing the capacity for coverage. Similar to the private sector, the cost of excess insurance has increased significantly over the past 9 years, resulting in the state bearing, more financial exposure for the claims, and that therefore increases the state's outstanding liability in the program. And finally, the program has often operated on a cash flow basis, pushing settlements into future years. 2 years ago, some of you may remember, I was asked to speak to the Joint Appropriations Committee as a part of a presentation regarding various aspects of the state's liabilities. During that presentation, we focused on 2 areas within the risk management program that were experiencing rapid growth in state obligations: the workers' comp program and the liability program. Since that time, the General Assembly and the governor has made several investments in the workers' comp program, and we are happy to report that those investments have successfully reduced the state's liability in that program. Now we think it's the time to really focus on a liability program. The state's outstanding liability for this program is currently underfunded. The projected balance for this trust fund at the end of FY25 is just $66 million. That's roughly 17% of the outstanding liability for current claims. We continue to get claims. They are becoming more costly, and we expect this number to continue to rise. The funding recommended by the governor is crucial to strengthen the program's financial foundation. It helps us address these outstanding liabilities, manage claims more efficiently, and hopefully defray some expenses and slow the trajectory of the growth. And like the governor's recommendation for the property program, the recommendation for a one-time appropriation in the liability program will delay burdening agencies with increasing premiums. All that said, I know the chairman and many of you may be more interested in how we stop the growth. As I mentioned earlier, the state has a significant amount of operational risk inherent in the services that we provide to our citizens. But it's important to address that risk on the front end. To that point, and as an example, investments made by the governor and the General Assembly in response to the recent system-wide assessment of the Department of Corrections will not only improve public safety, but can also help offset the growth in the liability program. We frequently see claims that result in part from staffing shortages and delayed maintenance of infrastructure. Security improvements and enhancements to facilities, as well as population management measures, as recommended in the assessment report and funded through the governor's recommendations, will mitigate the risk inherent in the important work that's performed by the Department of Corrections. And we fully support the recommendations in that area as well. Additionally, DOAS is continuously improving our loss control prevention efforts in collaboration with the agencies. As part of our strategic plan, we have recently expanded our loss control program and increased the number of staff in this area. We work with agencies on an assessment of their particular areas of risk and meet with them to discuss actionable improvements to address these issues effectively. So in summary, the governor's budget recommendations, including a one-time appropriation of $175 million to the liability trust fund and the amended, address the issues that we're seeing in the liability program by both funding current obligations and addressing the risk inherent in state operations. We do strongly support the governor's recommendation for this program and do humbly request your support. And finally, included in the governor's recommendation and the amended, as well as the FY26, is funding for House Bill 451 that was passed last year to provide a PTSD benefit to first responders. DOAS Risk Management Services is administering a program to provide that benefit for the state employees who are eligible per statute. And just $200,000 was appropriated in the FY25 for that program, but that will not cover the cost. And the governor has recommended $657,000 in the amended to supplement that original appropriation to fund the benefit. And those are the 3 items that are included in the recommendations for DOAS. We very much appreciate your consideration and request your support. And I'm happy to address any questions that you may have.
Well, thank you, Commissioner. I will start with saying I appreciate you at least speaking to, on some level, the attempts to limit the liability claims. That's a concern of mine. I want to treat the problem, not the symptom. So, if we're not making efforts to mitigate that, then what are we spending the money for? So appreciate those efforts, and certainly we'll have ongoing conversations about that. little aside question. A couple years ago, we put money in the budget to demolish certain state buildings. And if you can't tell me now, it's fine. I'm kind of putting this on you, but have we seen a measurable, effect on the property's insurance expense?
I'll defer to Wade on that question.
Thank you for the question, sir. No, sir. I mean, we share that data with the insurance carriers, the markets. We lay out for them what our space management plans are, what our future plans are, growth for the entire state. And we would have seen more of an impact had it not been for the national disasters, the natural disasters, the hurricanes, and the number of those that have taken place over the last 5 to 7 years. So it's somewhat been overshadowed by what we've seen in the entire international insurance market. We would hope that they treat our account as a separate, independently standing account, but when it comes to the underwriting process, we're not given that full benefit. We've seen some minor impacts to our program, but not the substantial impact you would think with the volume of change and correction that we saw.
Thank you for that. See one question, Representative Ridley.
Yeah, thank you. Actually, I have about 3 questions in this.
Well, I authorized one.
Well, they all kind of in hand. You said that there's a 343% increase.
Yes, sir. From FY 2016 to the end of FY 24, the outstanding liability and has increased by that much.
Okay, and you said that the $66 million, 17% of the outstanding liability.
You're checking my math? Yes, sir. That's,
That's what you said.
Right.
So you're telling me that there's potentially $388 million of liability soup sitting out there?
yes, sir. That's based on current claims, our claims reserve for current claims. The current outstanding liability is 394 million for those, that by the actuarial report.
Okay, and this same, where we're putting this 175 million at this year, what did we have to put in there last year?
Last year, we were authorized to increase the billings in that program by $13 million. That was the FY 25 recommendation, authorizing to increase the billings.
Thank you.
I say that's let me correct it. That's FY 25. We increased the billings in this property year. There was also an investment made in the amended FY 24 in the amount of $75 million.
Just in the year that we've had to put more in there. Is that?
Yes, sir.
That's what you're saying. Thank
Obviously, I'll say to that real quick before I move on to the next question. That's one of those things, not knowing exactly what your claims are going to be, analyzing that versus handling one-time money. But yes.
Yes, sir.
Representative Reeves.
Thank you, Chairman. Commissioner, thanks for that detailed information. One thing, just for informational purposes, tell us about the $1 million and $3 million cap or sovereign immunity waiver and Title 50. That's different than the private sector and local government. How does that work for the state?
Yes, sir. So we, thank you for that question. DOAS insures, all general liability claims as well as tort claims. We distinguish the two because as a state, we do have sovereign immunity for tort claims. And in the early 90s, the General Assembly, waived that sovereign immunity with a cap for certain claims against negligence claims against the state. So the cap for tort claims against the state is 1 million per individual and 3 million per occurrence. So while the liability to the state and tort claims is capped, there are a number of claims for which our liability is not capped, such as civil rights claims, some employment-related claims, those constitutional federal claims. So we deal with all types of claims. Our liability program covers auto liability, professional liability, and in addition to tort claims and general liability. Thank you for the question.
All right. I don't see any other questions at this time. I appreciate it. Appreciate the information. We obviously will have ongoing conversations as we move forward.
Yes, sir. Thank you so much for your time.
Thank you so much, Commissioner. I'll take a quick moment. We've had, to my knowledge, 2 representatives join us. ones in the audience, I'll let her come join us if she would like to sit up here with us. So, while she's coming up, Brian Prince, Chairman Prince is on the line. If you would like to introduce yourself, please go ahead at this time.
Thank you, Mr. Chairman. Representative Brian Prince, House District 132, Augusta, Georgia, and all of Jefferson County. It's glad to be with you, and we're back at it again. So let's see if we can find some money.
I appreciate you being here, and look forward to seeing you in person next week. Representative Hall, you want to introduce yourself? I'm putting you on the spot.
Hello, you hear me? I'm
Yeah.
Sue Hong, State Representative for House District 103 in North Gwinnett and South Hall counties.
Awesome.
Thank you.
Thanks for joining us. All right, moving on. We're going to move to Department of Banking and Finance. I believe Commissioner Hagler's online with us. For those of us here, page 5, section 14. If you guys are following along, Commissioner, can you hear us?
Yes, I can hear you. Are you able to hear me?
Perfect. Thank you.
All right. It's a teleworking miracle. Thank you. For those that I have not had the honor of meeting previously, I'm Kevin Hagler. I'm the Commissioner for the Georgia Department of Banking and Finance. I've been with the department about a little over 28 years now, and serving as Commissioner since 2013. So happy to be here. Oops, I'm getting a bit of an echo there. Okay. As far as what the department does at a high level, we're the bank regulator for the state charter banks and credit unions in the state. We regulate 115 banks with total assets of $137 billion. And two of the banks that you may recognize, Synovus and Ameris Bank, just to name a couple. We also regulate the state chartered credit unions in the state, 36 of those with total assets of over $31 billion. Delta Community Credit Union and Georgia's Own are just a couple of examples of those folks that we regulate as well. That's on our supervision side. When you look at our non-depository side, we license over 30,000 individuals and companies. That's mostly mortgage loan originators, mortgage lenders, mortgage brokers, as well as money transmitters, check cashiers, and installment lenders. So we stay pretty busy with all those. As the chairman mentioned, we're section 14 in your book. And we have a couple of requests there for a new program. I say new program, it's one that the legislature passed, I think 13 years ago, the Merchant Acquirer Limited Purpose Bank Charter. It's listed here in section 14.2.1 and 14.2.2. At a high level, that's for a computer update to be able to handle this new line of business for us, and 2 additional individuals to help us with the work. By way of background, the Merchant Acquirer Limited Purpose Bank Charter, so Georgia is known as Transaction Alley. I think 70% of all credit card transactions flow through the state of Georgia when going between banks and merchants there. There are a number of large players in the state that were kind of a legacy from Georgia being a hub for credit card activity before it became more advantageous to export rates from another state. But as a result, a lot of those operational pieces are still left here. So 13 years ago, the industry sought help from the legislature to create a new and unique charter to help them out. Visa and MasterCard, having been born out of banks all those years ago, they require that only banks be able to interact with them directly. So any of these entities that are operating here in Georgia that are not banks, they have to what they call rent the bin of the bank, rent their bank identification number. So they pay a bank for the privilege of being able to transfer their business through the bank and into Visa and MasterCard. There's a couple of reasons why they would like to be able to do that directly, and that's what this limited purpose bank charter is meant to do. One, potentially not have to pay another bank to do that and handle it in-house, but also, probably more importantly, is to be in control of your own destiny. banks enter business lines and they leave business lines, and merchant acquiring is one of those. The third largest bank that's involved in this is Wells Fargo, and it's my understanding that they have announced that they're exiting the business, for example. So the idea here is that we can create this limited purpose bank charter, and it's not one that takes deposits. Its sole purpose is for these entities to be able to do business directly with Visa and MasterCard. We worked on it 13 years ago, and we did approve an entity for an Israeli firm that was basically online only. But Visa and MasterCard were not overly interested in accepting this charter to do business with them at the time. But things have changed in the recent history, and so the last couple of years we've had a lot of conversations with Visa and with Fiserv and a number of others out there. And so we have approved Fiserv, which is really First Data in terms of merchant acquiring, to do business through this charter, and we expect them to go live with transactions at the end of this quarter or early next quarter. We have another application in hand from a large online-only company that we haven't accepted the charter yet. We're still looking accepted the application yet. We're still looking over for completeness, but we expect that to go well when we get working on it. Just to give you some idea of the scale and scope of this project, if you look at the top 10 list of merchant acquirers from 2023, which is the last time I have data, the national banks represent 3 of the top 10, and that's Chase, Wells Fargo, and Bank of America. They do $3.6 trillion worth of transactions a year, or at least they did in 2023. If you look at the other 7 entities that are on that list, and look at the ones that we've either received an application from and approved, or are actively speaking with, they perform or handle $5 trillion worth of transactions, so more than the 3 mega banks combined. We expect our licensees or our chartered entities to kind of crawl, walk, run with this, so we don't expect 5 trillion tomorrow, but it gives you an idea of the scope and scale of what we're dealing with here. And so we feel a little bit like the dog that finally caught the bus, and we're going to need some extra resources. So going back to the sheet in front of you, the software upgrade is that we don't have a federal regulator with this project, so we've got a bespoke call report that we've developed, examiner manuals and things like that. We'll be collecting that data, and we need to modify our existing database to be able to accept this call report information from these entities, to be able to process it, to monitor them on an ongoing basis, create ratios and trends and things of that nature. The 2 positions that we're asking for, given the size and scale of the 2 entities that we're already seriously engaged with, we're treating this like we would how we examine our large banks, Ameris, being those 2. And that when you get banks that size, you don't just pop in once every 18 months. You never stop being there. You never stop examining. And so we need dedicated examiners or central points of contact with these entities that would conduct probably a different type of exam each quarter and then roll it up at the end of the year, but it would be continuous, as well as continuous monitoring of call report information and things that come in, because that's how we determine what the capital requirements and things of that nature. Unfortunately, we also need these 2 positions to be relatively well funded, in that we need to hire, ideally from the industry, somebody with payments experience that we can leverage off with, because there's a lot of continuous development and refinement that we need to do with the work program. We've used consultants to help us with a call report and examiner training manual as an example. So what is proposed here is that 2 positions, one that would be a central point of contact with the Fiserv entity. The other one would be with the yet to be approved second applicant. And I can't name them yet just because we haven't accepted the application officially. But what the numbers here represent are 2 salaries at $125,000 per, plus benefits for the months of April, May, and June in the the existing budgetary process. The database update is 121,427 based on estimates that we have thus far. So I've probably rambled a little too much about this, but it's an exciting project for my department, and certainly one that has economic development interested as well, because it either helps solidify these companies' presence in Georgia, or as in the case of the second applicant, would bring a major player to the market here in Atlanta. Happy to pause there and answer any questions that you might have.
Well, Commissioner, I appreciate it. Certainly, appreciate some look at some vertical integration, especially one that might have a return on investment. Real quickly, I mean, speaking of new positions, I know we've worked over the years to try to help with turnover in those efforts. Can you give us an update on that and what you're seeing in your department?
Yes, sir. The COLA last year was very helpful, as well as for our supervision program. There was an additional $2,000 there. So our turnover is, I think, compares well to probably the state in general. It's for the examiner ranks, it's still around 14%. We're not a large agency, so it doesn't take but a couple of people leaving to really spike that number. But those have been very helpful for us in retaining folks. I would say, though, that we're still losing ground to inflation, which is not the fault of folks in this room by any measure. So, like I say, I was hoping that we would see something of an additional COLA to keep that momentum going in the coming years. I don't know that that's the case, but like I say, our examiner staff, we try to maximize the value there and do the work-life balance in every issue that we can to try to keep folks. But we're still lagging in that in the Southeast. We're still a little behind even states like Mississippi and Alabama, Tennessee, in terms of what we compensate our examiners for. And it makes it a bit of a challenge too, because we have the Federal Reserve and FDIC and NCOA locally, and their pay scale is usually around about 80% higher. So not trying to compete with them, but it would be helpful to be a little more in line with our surrounding states.
Well, Commissioner Hagler, I appreciate it. I don't see any other questions at this time. And as soon as I said that, I knew that would solicit something. So, Representative Reeves.
Thank you, Mr. Chairman. I'll be really quick. This is just because I've got you on here. This is not a math or budget question, but community banks in Georgia, I know during the Great Recession, a lot of them went away. There was kind of a trend for them to come back, and it seems like a lot of them are getting bought up by multi-state, bigger banks. Do you see any trend in one direction or another with community banks in Georgia?
Yes. Well, you're spot on, of course, and unfortunately, there is a continuing trend both in Georgia and nationwide with community banks being merged and acquired. We had a couple last year. We had three last year and 2 the year prior. I don't see that ending, and what worries me the most is we don't have an environment that's conducive for de novo banking activity. There was a time earlier in my career, before the Great Recession, that we opened as many as 20 to 25 new community banks a year in Georgia. And I think since the Great Recession, we've opened 5. And it's been a couple of years since the last one, and we're one of the leading states in opening banks. So that's just not a good statistic, and not a good answer for you. I will say that while our portfolio has declined in numbers, the number of the total assets in averages keeps growing. So we have fewer community banks, but they are a good bit bigger, which you would think that our life would be getting a little bit easier with fewer banks to monitor, but they become larger and more complex. So that means that we just keep pouring training into the crew and trying to keep up.
Well, Commissioner, I appreciate you being here. Appreciate the information, and as I've said before, we'll continue to have conversations as we move forward the process. Thank you.
Thank you very much. I appreciate the opportunity to present, and sorry it was via Zoom and not there in person.
Well, if you know, some people, well, we can't drive on ice, so you're in good hands. You're where you need to be. So I appreciate your attendance today. Moving on, we're going to go to Department of Driver Services, page 6, section 21. I believe Commissioner Moore, you're online. We need to see if we can. We cannot hear you yet, Commissioner. If you can unmute or check something on your end. Still do not. Commissioner, can you hear us? Yeah, we're gonna, Commissioner Moore, if you can hear us, we're gonna circle back to you, and we'll come back to you. We're gonna move on. We'll go to Stone Mountain Park Memorial Association. Mr. Bill Stevens.
Good afternoon. Thank you, Mr. Chairman.
Good afternoon.
Members of the committee. I have to tell you, as a former member of the General Assembly, it gives me post-traumatic stress disorder just being here in this room, having been here several times before. But I appreciate you letting me come before you today, talk about the governor's recommendation. It's on page 11 of your tracking document, item number 34.7.1. And it's a simple increase in funds to address some operational needs. And it comes about because our biggest challenge, or one of our biggest challenges, is infrastructure. And we have old infrastructure at Stone Mountain. The last real renovation of properties, of the buildings or properties there, was right before the Olympics in 1995. So we have spent an inordinate amount of money dealing with some of those infrastructure needs. This appropriation simply gives us the flexibility during these winter months to be able to keep funding some of those infrastructure improvements. And that's what it's there for, and that's what it was recommended for. So that's our request for the mid-year budget. And I'll yield for any questions.
Sure thing. You know, I know we've worked on a few of these things in the past. I know that some of the buildings that are aging, I know that we, I think we changed some HVAC last year. I think we're renovating the building the tram goes in and out of.
Yeah.
You know, I know there's a lot of aging things, you know, so, I mean, we've obviously been addressing some of those, and this is just an additional in the same right.
Yes, sir. For those projects, we certainly receive bond funding for most of those. But the real needs that we have on a day-to-day basis are the smaller repairs in the various buildings and around the park itself. So this gives us the flexibility to keep addressing some of those things you wouldn't want to do with bond funding.
Understood. Any members of the committee have questions? Getting off light today.
Yes, sir. Thank you very much.
Not so fast. Not so
Okay.
fast.
Steve.
I just want to say that, Mr. Stevens, we appreciate you very much in the time of COVID and very much controversy. I think you've done a really good job with Stone Mountain.
Thank you, sir. Thank you, Mr. Tarvin.
I appreciate you, Mr. Stevens. Commissioner Moore, we're going to go back to you. Let's see if we got a strike too, Commissioner. One more, we're cutting the whole budget. All right, we'll give you another shot. We'll come back to you in a minute. All right, GTA, Georgia Technology Authority. I know that we have Officer Hines here, but I think Shanzia is online.
I am, and joined by Kevin Sanford, our CFO.
Awesome. Good afternoon. We're on page 4, section 12.12 for those of you following along.
Okay.
Okay.
Good
Ms. Thomas, go
afternoon,
ahead.
Chairman and members of the committee. Are we ready?
Yes, ma'am.
Thank you. My name is Shanzia Thomas. I'm honored to serve as your CIO and the Executive Director for the Georgia Technology Authority. On page 4 of the tracking sheet under 12.12.1, you will see a payment to GTA's Technology Empowerment Fund for 3 projects totaling under $104 million. These 4 projects are for a project that we already have, which is DHS STARS Child Support Case Management System. The second project is DCH Gateway Modernization Project, which are those 2 projects are very huge, and a smaller project, which is a Board of Dentistry and Board of Pharmacy, electronic licensing implementation. These 2 are separate boards, but they share the same staff and the same system. They work as one. The oversight that GTA provides through the Technology Empowerment Fund helps to ensure that all these critical IT projects are completed on time and on budget. GTA provides agencies with technical oversight and the expertise that's needed to help ensure the project's success. I appreciate the generous appropriations this committee has provided over the years to our agency. Your commitment has supported our efforts to improve IT service delivery, cybersecurity protection, and the broadband deployment across the state. So with that, I thank you, and I welcome any questions you may have.
All right. Well, thank you. I guess my first question is for some of these, in the amended for sure, which one of these are ready for RFP, ready to go out of the gates?
With the new projects,
Yes, sir.
well, DHS STARS project, we have 4 RFPs currently on the street. 1 for PMO, 1 for IVNV, 1 for a QA tester, and 1 for DDI. So those 4 are already out there. We're working very closely with the DHS team. That's a lot of work, a lot of manpower to get those things done. The Gateway project, we haven't started that yet. That is going to take getting with DCH and DHS on building those requirements first. It is very critical that we get the requirements done in order to create a viable RFP to put on the street to make sure we get the system that we want. So we haven't started that yet. And we're right now for dentistry and pharmacy, we're looking at that business case. This is something new for us. It's a very small project, but still important. And we're going to look at that business case to see what we need to do there.
Okay. For some of the newer members on the committee or anybody that's curious, I know this is obviously a fund where we set aside money to handle some of these projects, especially multi-year projects, so that we know the funding is there and available as we roll out. We've talked to some of these at length. Can you tell us with the money that has been placed there over the last several years? Obviously, that gets paid out over time. How much money do we currently have in that fund? How much has been paid out? That sort of. Can you get an account of that at all?
Yeah, currently in the fund sitting today, there's a little bit over $198 million there. With that, what's been paid out? Kevin, do you have that with you? What's been paid out? And I think the only agency that we've paid out funds for is SAO, the Next Gen project.
Yes, absolutely be happy to do that. So we have dispersed a little over $25 million, both to the Department of Administrative Services and SAO for that one Next Gen project. That is correct.
Okay. Well, which leads me to my next question. So obviously that money is sitting there, certainly accruing interest. Can you give me an account of that interest? How much interest we've had? Has that interest been put back into the general fund? Is it sitting in that account? Have we used it for other things?
That interest is still sitting there. We thought the interest was going to be swept when we got TEF 2 years ago, but the interest is sitting there. In FY23, it was 1.8 million in interest. In FY24, it jumped to 3.1 because we got the additional 58 million, and now we have interest on accruing interest. In FY25 up to date, it's right at 5 million. So almost a total of $10 million sitting there.
And we've not, that's, I mean, obviously with really the next gen project being the biggest payout, we haven't utilized those funds necessarily at this point for any other projects, nor has that been put back into the general fund. Is that correct?
Right, not for any other projects. Now, there was a conversation with GTA and OPB. As we get more projects, there's going to be a need for more resources. Before we got the last 5 last year, I received an email from Ms. Dixon saying, what are you going to need? Do you need anything? And I emailed her back and said, we may need some additional project managers. So as we got the new 5 projects, I went to OPB and say, I do need project managers. And we agreed that we would use a portion of the interest for that. And I think we've used about 31,000 out of that 10 million, but that's it. But again, as we get new projects, we do need additional PMs for those projects, but that's about it.
Okay. Obviously, we can discuss that further, but and I think it would be most appropriate just to account for that and allocate it appropriately.
Okay, it is.
That is great, and I appreciate the information. Members of the committee, that's I think all the questions I have at this point in time. But anybody else? All right. Well, thank you very much. Appreciate you. Appreciate you joining us. Appreciate the information, and we'll continue to have our conversations moving forward.
Okay, thank you so much.
Let's see if third time's a charm.
Is the third time the charm?
Let's go. Let's go.
Well, I'm Travis Kenny. I'm Commissioner Spencer Moore, but I'm glad that I could be here today. If you could, just let Sid get off my camera at my computer. He's trying to fix it. Mr. Chairman, thank you for allowing us to be here to present our budget today. We're certainly appreciative of the support that you all have given us, as well as the governor. I have a presentation I'm going to slide. I'm going to. Hey, are you sure? All right, good. Next slide. Also have.
I think the camera you're sitting in front of is muted, and maybe a camera somewhere else in your office is unmuted. I think maybe we're getting an echo here because of that.
Can you hear me now?
Yes, sir.
All right, perfect. David, if you could drive for me, it'd be great. I have Stacy Cheek here, who is with me. She's our budget director. Hopefully we'll get through this a little bit easier than the technology to try and get up. Next slide, please, David. One more. As always, I like to start with just an overview. It looks like I'm also echoing again.
We can hear you perfectly.
Okay, perfectly. I always like to start with an overview of where the agency is, and certainly I'm super proud of what our team is doing. I'd like to start by sharing these Real ID compliant numbers, which is 9,389,376 Real ID compliant driver's license, and we are sitting at 99.913% of all Georgians who hold a credential being Real ID compliant. This is extremely important. If you've been to the airport lately, you know that TSA is saying that you have to have a Real ID compliant license to fly domestically starting on May 7th, 2025. So we are happy to say that Georgians are well on our way in order to be compliant. And if you want to fly, obviously you have that opportunity. Next, I also hope you got a copy of this just to look at what we're doing as far as the number of people that we're serving both face-to-face as well as online. Really happy to say that we are serving more than 95% of our customers in 30 minutes or less. We're serving right at 98% of our customers in 30 minutes or less. So if you would, David, move to the next slide. We just have three simple requests today, Mr. Chairman, members of the committee, and they are all in our license issuance program. And if you are, again, at budget tracking sheet 21, page 6, you will see those requests. They total $1,022,000. So next slide, if you will, David. The first request is to assist our investigators. We have a team of investigators, 15 law enforcement officers who work in our agency on a number of different things, including those cases that you see or types of cases that you see on this presentation. We have been using a case management system that is dated. It's called Spillman. And one of our goals and one of the directives is to move all of our data into the cloud, the Gov Cloud. This is one of our only remaining systems that is up at NADC, and we are hoping to get the funding to move this system. We've already gone out and completed an RFP. We are simply waiting for a notice of award and then move forward if an appropriation is provided. One thing I will note quickly on these cases, most people don't realize that as we as an organization start to create more customer convenient opportunities, this certainly happened after COVID, where we allow for customers to be served in different places outside of being in person. We are also challenged with ensuring while we're providing that convenience, we're also providing a very secure way in which we can know that it's the right individual that we are working with. I'll speak more to that in a couple of other requests or the other requests that I have, but this system, we feel like would get us to that 21st century solution that we're looking for as an organization, and again, help us manage the cases in which we have. The request is $320,000, line 21.2.1. Next slide, David. The next slide is request. It's an enhancement from a request that you've already provided us. We're happy to say that we have utilized the funds that have been provided in the past in a very good way. And we're moving very forward in introducing technology into our call center that would allow us to more effectively manage the calls that come into our agency. We are one of the larger and bigger call centers in the state. We have about 55 agents. They are answering, as you see, more than 2 million calls that are coming in with the assistance of a voice bot. And what we utilize this for is to triage those calls that may come in that can easily be answered by a computer voice bot versus being answered by live persons. Over the last 2 years, and you can see the FY 23, 24, and 25, you'll note that as we brought the bot on, they've been able to answer more calls, going up from 1,161,000 to 1,686,024 without being transferred. When they do transfer, they come to a person, obviously, who is able to assist them. 62% of the calls that we get today are not transferred. They're actually answered by that bot. One of the things we want to continue to do is introduce technology where it's appropriate. And in doing so, again, ensuring that we're dealing with the right person. The new phase of the voice bot that we're hoping to get is for $452,000. And the goal for it is to introduce AI from the standpoint of being able to scour our website and answer even more calls than we are it's able to answer today. Next slide, Ms. David. And our last request, Mr. Chairman, is address verification request of $250,000, line 21.2.3. And this, again, is one of our efforts to combat identity theft. As an agency, this is something that we investigate highly. We are introducing new ways in which people can come and be served from our agency, but we never ever forsake that for security and ensuring that we have the right people. So we're requesting $250,000 to add a technology solution that will allow for us to know not just that we're dealing with the right person, because that's a part of our technology already. We know through video verification, as well as other technology that we've implemented when people are working or using our services outside of our centers, that we're dealing with the right person. Now we need to know that we're dealing with the right address. As you can imagine, a reason for this need is we are an agency that obviously provides a lot of information to other agencies. We want to ensure that the information that we're providing is as accurate as possible. Last slide, David. So in summary, we're asking for 3 requests: $320,000 again for the investigation case management system, $452,000 for the voice bot phase 3, and $250,000 for the address verification, totaling $1,022,000. Mr. Chairman, I'll yield. If there are any questions, I'll be glad to answer them. Sorry again for the technology issues.
Well, I'm going to forgive you for one reason. The digital ID is fantastic. And I'll give this as a public service announcement for those of you that have joined us today. Don't tell your friends. But the shortest line at Atlanta Hartsfield is not TSA PreCheck. It is not clear. It is TSA PreCheck with digital ID. It is unbelievably quick and fast and a short line. So just, keep that amongst us kids. But Commissioner, I appreciate you and everything you've done over DDS. I do not have any additional questions at this time. Anybody on the committee? Commissioner, I appreciate it.
All right.
Maybe when we get into 26, we'll be in person and won't have to fool with that Zoom stuff.
You better believe it. I'll be down next time.
All right. That sounds good.
All right.
That sounds good.
All right.
Thank you.
Have a good evening. Yes, sir.
Well, committee members, that's all we have on tap today, except for one item. For those of you guys that don't know, I know everybody in the audience does. The people that know this budget more than anybody are folks like David Hartman sitting next to me. These guys work tirelessly to know what's going on in this budget and to help people like me even have a semblance of an understanding of this budget. And I appreciate David and his efforts, and certainly everybody in the budget office, but want to acknowledge him before we get out of here today. Anyone else, members of the committee, have anything for the good of the order? Seeing none, we will stand adjourned. Thank you.